lost $32 billion. Not over years, not slowly, but in just a few days. And here's what makes that number even more shocking. It wasn't caused by bad trades. It wasn't caused by a market crash. It wasn't even caused by bad luck. It happened because the money was never really there. Now think about that for a second. Billions of dollars, trusted, deposited, invested, and yet it didn't exist in the way people believed it did. This is the story of the man who convinced the world he was a genius. A man who built one of the fastest growing financial empires in modern history. A man who was praised, celebrated, and trusted by almost everyone. Politicians trusted him, celebrities promoted him, major investors handed him billions of dollars. He lived in a luxury penthouse. He had access to the most powerful people in the world. He appeared on global stages and spoke like someone building the future. But at the same time, he played video games during meetings, dressed casually, acted like none of it really mattered. And strangely, that made people trust him even more. Because he didn't look like the typical billionaire. He didn't act like one either. He looked normal. Almost too normal. But behind the scenes, something wasn't adding up. And at first, no one noticed. Because everything on the surface looked perfect. The company was growing fast, the money kept coming in, the headlines were positive. But underneath all of that, there was a problem. A very big one. And the scary part is, it wasn't hidden very well. In fact, looking back now, the signs were there all along. But to understand how everything collapsed, you have to go back to the beginning. Before the billions, before the fame, before the headlines, there was just a quiet kid who saw the world a little differently. And that difference is exactly what started everything. He wasn't loud, he wasn't flashy, and he definitely wasn't the kind of person people expected to become a billionaire. Sam Bankman-Fried was different. From a young age, he was obsessed with one thing. Not money, not status, but logic. He liked solving problems, breaking things down, understanding how systems worked, and more importantly, where those systems didn't work. He studied physics, which isn't really about memorizing facts. It's about understanding patterns, cause and effect, structure. And after graduating, he ended up working at a trading firm. That's where everything started to click. Because trading, at its core, is just applied logic. Numbers moving, prices changing, opportunities appearing and disappearing. And then he noticed something most people ignored. Crypto prices were not the same everywhere. In one country, Bitcoin could be cheaper. In another, more expensive. Now, for most people, that's just an interesting detail. But for him, that was an opportunity. So he did something simple. He bought Bitcoin where it was cheap, moved it, and sold it where it was expensive. Then he did it again, and again, and again. And at first, it was small, a few trades, a little profit. But something started to happen. The profits grew faster than expected, because this wasn't luck, it was a system. And systems scale. Soon, he wasn't making thousands, he was making millions. And that's where most people would stop. Take the win, walk away. But he didn't. Because once you understand how money moves, you stop thinking about how to earn it, and you start thinking about something else entirely. Control. Control over the system itself. Control over the platform people use. Control over the flow of billions of dollars. And that idea is what changed everything. Once you understand how money moves, you start to realize something most people never think about. The real money isn't in trading. It's in the platform, where everyone else trades. Because if you control the platform, you don't just make money, you control the flow of it. And that's exactly what he decided to build, FTX. At first, it was just another crypto exchange. Nothing too special, nothing too different. But that didn't last long, because he understood something most competitors didn't. Traders don't just want access, they want power. And power, in trading, comes from one thing: leverage. The ability to trade with money you don't actually have. Now think about that. You deposit $1,000, but you're allowed to trade as if you have 10,000. If you win big. But if you lose just as fast. And that's what made FTX different. It wasn't just a place to trade, it was a place to take bigger risks. And people loved it. Because when things are going up, risk doesn't feel like danger, it feels like opportunity. So users flooded in, money poured into the platform, billions of dollars sitting inside FTX accounts. And just like that, everything changed. He wasn't just a trader anymore, he was the system. And when you become the system, you gain something even more powerful than money: trust. People trusted the platform, they trusted the brand, and most importantly, they trusted him. And that trust is what made everything that came next possible. Once people trust something, it starts to grow faster than logic can keep up. And that's exactly what happened with FTX. The platform wasn't just growing, it was exploding. New users every day, more money flowing in, bigger trades, bigger risks. And with that growth came something even more powerful: attention. Suddenly, everyone was watching. Big investors, major institutions, even governments started paying attention. And when that happens, something interesting begins to form. Social proof. Because when powerful people believe in something, everyone else follows. Then came the endorsements. Famous athletes, global celebrities, massive brands, even entire stadiums were named after FTX. Think about that. A crypto company with its name on a stadium. At that point, this wasn't just a company anymore. It felt permanent. To the world, this was the future of finance. And Sam, he became the face of that future. But what made him even more interesting was how different he seemed. He didn't wear expensive suits, didn't act polished, didn't try to look powerful. Instead, he wore shorts, drove a simple car, played video games, even during meetings. And somehow, that made people trust him more. Because it didn't feel like an act. It felt real. People called him a genius, a visionary. Some even called him the savior of crypto. But there's something dangerous about being seen that way. Because when everyone believes in you, they stop questioning you. And that's when the real problems start to hide in plain sight. Because behind the success, behind the headlines, behind the billions, there was something most people didn't even know existed. Another company. Quiet, hidden, almost invisible to the public. Its name was Alameda Research. For most people, it meant nothing. It wasn't advertised. It wasn't talked about on big stages. And it definitely wasn't the face of anything. But behind the scenes, it was one of the most important pieces of the entire system. Because Alameda was a trading firm, not a platform, not an exchange. A firm that made money by placing bets. And at first, that didn't seem like a problem. Companies trade all the time. That's normal. But this wasn't normal, because Alameda and FTX were supposed to be separate, independent, unconnected. But they weren't, because behind closed doors, they were deeply connected. And that connection is where things started to get dangerous. Alameda wasn't just trading with its own money. It was trading with borrowed money, huge amounts of it. And borrowing money in trading can be powerful, but it comes with one rule. If your trades go wrong, you have to pay it back. At first, things went well. They made profits, big profits. And just like before, success started to build confidence. Then confidence turned into something else. Overconfidence. Because when you keep winning, you start to believe something dangerous, that the system can't fail. And that's when people take bigger risks. They borrow more, they bet bigger, they push further. And for a while, it worked. But there's a problem with that kind of system. It only works as long as nothing goes wrong. And eventually, something always does. At first, nothing looked wrong. The system was still running, trades were still happening, money was still flowing. From the outside, everything seemed fine. But underneath, something had already changed. Because the market started to turn. Prices dropped, confidence faded, and those big bets started going the wrong way. At first, it wasn't obvious, just small losses, manageable. But then they got bigger and bigger until something became clear. Alameda was in trouble. They had borrowed too much, taken too many risks, and now they couldn't cover their positions. They needed money, a lot of it, and they needed it fast. Now here's where everything changes, because when you're running out of options, you start looking for the easiest solution. And for Alameda, the easiest solution was right next to them: FTX. More specifically, the money sitting inside FTX accounts, customer funds. Let that sink in. Imagine depositing money into a platform, believing it's safe, believing it's just sitting there, waiting for you whenever you need it. But behind the scenes, that money is being used, not invested carefully, not managed safely, but risked, placed into massive trades, used to cover losses, moved around without people knowing. The money people trusted was no longer just theirs, and no one knew. For a while, it stayed hidden. The system kept running. The platform stayed online. Users kept trading, completely unaware. Because from the outside, nothing had changed. But underneath, the problem was getting worse. The losses weren't gone. They were just hidden. And the more they tried to cover them, the bigger the hole became. Until eventually, something slipped. A report leaked. And at first, it didn't seem like much. Just another article, just another piece of information. But buried inside it was something that changed everything. A huge portion of Alameda's assets were made up of FTX's own token. Think about that. They weren't backed by real cash. They weren't backed by stable assets. They were backed by something they created themselves. It was like building a house on top of another house made of paper. And the moment people understood that, everything changed. Investors started asking questions. Users started getting nervous. And then, something predictable happened. People tried to withdraw their money. At first, it was small, a few withdrawals, nothing unusual. But fear spreads fast, and once it starts, it doesn't stop. More people tried to withdraw, then more, then thousands, until it turned into something else entirely. A rush, a run on the system. Everyone trying to get their money out at the same time. And that's the moment everything began to break. At first, FTX tried to keep things normal. Withdrawals were still open, the platform was still running. From the outside, it looked like everything was under control. But behind the scenes, pressure was building fast. Because withdrawals weren't slowing down, they were accelerating. Millions, then billions, started leaving the platform. And that's when the real problem became impossible to hide. The money wasn't there. Not all of it. Because so much of it had already been used, moved, traded, lost. And now, people were asking for it back. Within days, billions of dollars were requested for withdrawal, more than the system could handle, more than it could ever repay. And then, the cracks started to show. Transactions slowed down, delays appeared, users started noticing, and when people notice something is wrong, they panic even more. More withdrawals, more pressure, more fear, until finally, the system couldn't take it anymore. Withdrawals were frozen. Just like that. No warning, no time to react. Millions of users locked out of their accounts, watching their balances but unable to touch them. That's when the illusion finally shattered. The $32 billion empire collapsed. In just a matter of days. And just like that, it was over. Not slowly, not gradually, but all at once. One moment, it was one of the biggest companies in the world. The next, it was collapsing in real time. Millions of users woke up to something they never expected. Their money was gone. Not temporarily locked, not delayed, gone. Savings, investments, entire life funds. People who trusted the platform now had nothing to withdraw. And the worst part? Many of them had no idea what actually happened. From the outside, it didn't make sense. How does a company that big lose everything so quickly? That's when the investigations began. Regulators stepped in, law enforcement got involved, and what they started uncovering was worse than anyone expected. Because this wasn't just bad management. It wasn't just risky trading. It was something deeper, something systemic. Billions of dollars in customer funds had been misused, moved without permission, used to cover losses, passed between companies as if they were the same entity, which they were never supposed to be. The system wasn't just failing, it had been broken from the inside. And the more investigators looked, the worse it became. As the truth came out, there was no way to hide it anymore. The story that once looked like success was now something very different. Sam Bankman-Fried, the face of crypto's future, was arrested, charged with multiple crimes, accused of misusing billions of dollars. And suddenly, the genius narrative started to fall apart. Because when you strip everything away, the image, the success, the attention, what's left is the truth. And the truth didn't look like genius. It looked like something else entirely. So how did this happen? How did so many smart people miss something so big? Because it didn't look like a scam. It looked like success. Big offices, big names, big money. And when something looks that real, people stop asking questions. They assume it's been checked. They assume it's safe. They assume someone else already verified it. But no one did. And that's the dangerous part. Because the bigger something becomes, the harder it is to question. Until one day, it collapses. And when it does, it doesn't just take money with it. It takes trust. So the next time you see a billion-dollar success story, ask yourself one simple question. Is it real? Or just another illusion waiting to collapse?